Rigetti Computing is making headlines again, and not just for the right reasons. On October 10th, the stock is all over the place, despite major bullish news. Now, is this a classic buy the dip opportunity, or the first real sign that the hype is over? Today we're breaking down exactly what's driving the chaos, what the market might be missing, and whether Rigetti is quietly setting up for a breakout or a breakdown. Now, yesterday Rigetti closed at around $47 per share, and today the stock saw a high of around $49, nearly hitting that psychological $50 mark, but then plunged to a low of $44.63. As of today, it's trading around $46, down about 1.15% on the day. That is obviously a huge swing in a single session, and we're going to be seeing what's causing this whiplash. Now, the company reported specific news, which is overwhelmingly bullish, right? Rigetti has secured approximately $5.7 million in new purchase orders for two of its upgradable 9-qubit novel quantum computing systems. This is a massive win for two reasons. First of all, the customers, an Asian technology manufacturer and a California-based startup, show growing commercial traction outside of just government contracts. Second is that delivery is expected in the first half of 2026, giving the market a clear timeline for revenue recognition. As well, Wall Street is taking notice, with one analyst with not only reiterating a buy rating, but has also significantly raised their price target to a striking $50. They're pointing directly to these new contract wins and the company's strong financial position. This latest move solidifies the narrative that Rigetti is successfully transitioning from pure R&D to commercial viability. So if the news is good, why the drop today? Well, the key is the second part of the story, the broader market weakness. Despite Rigetti's positive developments, the stock is being dragged down by a general sell-off across the wider market, but there's an important factor specific to Rigetti, which is the valuation. The stock has already seen a significant surge in 2025 due to quantum hype and strategic deals, causing some analysts to consider its current valuation to be very, very high. Now, in an environment of broader market caution, highly appreciated and high valuation growth stocks like Rigetti are often the first to see the profit taking. You may be asking yourself, well, what's the bottom line? Well, Rigetti is executing on its roadmap, securing real-world commercial orders and receiving top analyst validation. The drop today appears to be less about the company and more about the tough market environment for a stock that has run up so far and so fast. Investors need to weigh the long-term potential of these commercial quantum wins against the short-term volatility and already high valuations. Now let's analyze the chart of Rigetti and take a closer look at what's going on. As you can see here, the company is seeing a nice surge in volume. Right here, we see around 107 million here. The average volume, though, is around 89 million shares. And today we're doing, way more than that. The market cap of the company is around $14 billion. With currently seeing earnings of around 1.8 million, which I think is, like I said, over leverage. The company is still not profitable, as you can see here on the earnings. They keep missing overall their estimates. They came really close and in line on the last earnings that they had here, where was in August 12th. They had a surprise and came in line with the analyst estimates, right? So currently we're going to be seeing here the chart here. So the stock is, seeing a very important surge in volume here. As you can see here, right, the volume was, very, very low during the, this phase right here. But, ever since, this, break above resistance of around $19, the volume has just surged, at a very fast rate. If we can, just zoom in here, the volume zoomed in, a lot of, growth here. And the stock has been seeing, a very nice hold of the 90 EMA. Like I said, when we have a trending stock, generally the 90 EMA is the one to hold, and that's where we found support on the most recent and latest pullback, which was here on this date here around the 1st of October, where we found buyers here exactly at the 90 EMA at a level of around $29.05, and the stock is holding well above it. And I do see that if the stock does pull back, it will find support most likely at that level because institutions are looking to buy this name, right? Get this name around at a discount. which is, very important. Obviously, the stock is well above, 50 and 200, which are, just longer term trends here, on the company. But, the thing here is that I do expect a pullback, and we've been seeing warning signs of this, right? So if I just look here at the RSI, we see that we've been having warning signs 2 times in a row, which is, I believe, is not the best time to buy Rigetti right now, right? So I do expect a pullback because we've been having pretty much the RSI be of around 83 RSI. The average here should be around 70. Once it gets above 70, that means that there is a lot of people buying, a lot of FOMO, right? A lot of surge in volume. And, it's very expected, right? We saw this surge from around $16 all the way towards $45, right? Which is, a very dramatic increase, right? So in around 30 days, we went up 30%, right? Or actually 180% here. I misread that. But, in 30 days, we went up 180%, which is just astronomical here on, the company. So I do expect a pullback towards the key levels here, like I said. We may find support here at this important confluence zone, which is the earnings anchored VWAP, forming confluence or matching with the 50 MA. So around this zone, around 27 to $28. That's where I believe that we may find, some buyers if we do fail this 90 MA. And the next level where I do believe we may find some buyers is going to be around this area of support. I'll put that as green, signify buyers, which was the last breakout area, the last resistance level, right? We broke above that here. That's where we saw this intense volume and the surge here. And, usually when we break a level of, resistance, which should be here around $17, $18, we tend to see, a support level because those people that, went short, let's say they're still holding and they want to break even, then they buy back their shares and that causes some buying. And then people who've seen the breakout don't want to miss out and then they buy more. So there's a double buying factor that occurs during, these equities. But, I believe that the stock does have those levels of support of $28. And if it's even a deeper correction, like really, really deep, we always have to be prepared, right? The volume has been declining. Now we see this, it's been declining over the past couple of trading sessions. Then I do believe the support will be around $18, right? We always have to be prepared for the downside, manage our risk, which is very important, especially during these very high valuation periods and, with, Trump having these tariffs. But I believe that the stock is, prone for the upside. I do believe that the stock, is a little bit overvalued, but, I do see the price target reaching towards, $62.20. That is my price target on this company, Rigetti, which I'm just, firmly bullish, longer term. But right now, the company is looking like it needs a pullback here, especially on the stock price with, the RSI giving you some warnings. Now, overall, let me know down in the comments section what you think about Rigetti. Is Rigetti headed to $50 soon, or is it due for a bigger pullback? Don't forget to like and subscribe for more deep dives on the biggest movers in the market. And as always, don't let the markets whip you guys out. I'll see you guys on the next one.